Right. Okay, Chakri, stay with us. Just going to address another IPO management, and we have the management of J.G.Chemicals joining in on the show right now. Anirudh Jhunjhunwala, the MD and CEO, and Anuj Jhunjhunwala, the Director and CFO, join in on the show right now. Gentlemen, hi, both of you. Afternoon. Good to have you on the show. Anirudh, if I could start off the discussion with you, you're raising funds for the capex purpose, as we understand. Elaborate a little bit more. What exactly is the plan?
So good afternoon, and thanks for inviting us to your show this afternoon. So as far as the IPO is concerned, we are raising funds for various purposes, and I would like my CFO, Anuj Jhunjhunwala, to take you through that right now.
So thanks for having us on the show. We are raising about 165 crores for our various initiatives that we've outlined in the RHP. Partly it would go to fund the R&D center at a material subsidiary BDG Oxide. That's about 6 crores or so. Then about 90 crores or so would be used to fund the future working capital of the companies, and about 25 crores or so would be to repay the debt at the material subsidiary. And in addition to that, we are also having various growth strategies that we've outlined. We are looking at putting up a plant in Western India in Gujarat. We are looking at putting up a plant in Southeast Asia, which is one of the largest tire production centers in Asia outside of India and China. We're also looking at expanding our zinc oxide offering across certain various special grades of zinc oxide, which are more focused on the electronics and battery applications, and also the oil and gas applications and the semiconductor sector. Along with that, we've recently expanded into the agriculture sector, wherein we've started a plant for making zinc sulfate, which is a micronutrient used across various agricultural inputs. And we intend to use that as a stepping stone to get into various other zinc-based micronutrients going forward.
So that's the use of the capex that you're talking about. I just wanted to shift the focus and talk about your earnings as well. From, of course, 430 crore thereabouts that you did in FY21, you're nearly double that, at least if I analyze it. And the profitability too is looking okay. Could you talk to us about what's the way forward? Because while the revenue has jumped up, the margins have been coming off. So where do you see the margins stabilizing?
So as far as the revenues are concerned, you rightly pointed out that we've had a good growth over the last few years. As far as the profitability is concerned, also over the last 3 to 4 years, if you see, there's a considerable rise in profitability year on year. It's a sustained growth that we've done over the last few years. As far as the current year is concerned, there were certain headwinds in H1, which has caused the profitability to slightly come down in the H1, but post that we are seeing very decent movement in our business. And also the reason why the H1 numbers were slightly lower than what they should have been was because of a sharp fall in commodity prices. And essentially our business is although a pass-on model wherein we buy things on the LME and we also sell our zinc oxide on the LME. But obviously if there is a very sharp movement in commodity prices over a very short term, then there are stocks which we carry which take the brunt of it. This is stocks and inventory that we carry on a perpetual basis. So any rise and fall in zinc prices affect them either way, for the good and for the bad. So this is only on the perpetual inventory that the business carries. And that's what took a hit a little bit in the first half of the year. Since then, zinc prices have stabilized and operating parameters back to normalcy.
Okay. Either of you can take this, and given that, I know you spoke about the prices, but given that the business is completely dependent on one product, zinc oxide, will you be diversifying then towards other products as well?
Sure. So obviously, as you know, about 98% of our revenues today comes from zinc oxide. But when you look at zinc oxide has various applications. So about 75% comes from tires, and the rest 25% comes from other sectors. So we are looking at, increasing the mix of the other sectors going forward. We've recently got the GMP approval as well, which helps us, make more inroads into the pharmaceutical and the cosmetic segment, wherein a large amount of zinc oxide is sold. In Europe and North America, there's a huge quantities of zinc oxide which get sold in these sectors as well as the agriculture sector. So we expect the sales from these segments to increase. In addition to that, we are also looking at diversifying into certain other products, which are also, where we have certain strengths, like, which we can sell more to the tire sector, like reclaimed rubber and certain other niche rubber chemicals. These are segments which we would expect to increase in the next 2 to 3 years, which would contribute to our revenue, wherein the overall reliance on zinc oxide as a product would come down. However, I would like to again mention that our business of selling zinc oxide to the tire sector is a very, very strong business, a very, very sustainable business, and we would continue to grow that at the best possible pace we can. the overall mix would come down, surely, primarily because of the other segments increasing, not because we are not intending to grow the tire business going forward.
Okay, that point is taken. And what about exports? As a percentage of revenue, I'm sure that has also been inching up. There have been these increased inquiries within the entire chemical space as well. Where do you stand, and what are you expecting the export contribution to be, let's say, 2 to 3 years out?
So currently we are exporting close to under 15%. So between 10 and 15% our exports vary. And this is mainly to Southeast Asia. And also recently we've started exporting our product to Europe also. Now, as far as export growth is concerned, recently in BDJ Oxide, we set up a state-of-the-art specialty plant which manufactures very high-end grades of zinc oxide. This plant is one of its kind and has approvals of GMP and other pharma license, etc. We expect that exports from this particular sector to grow in times to come, especially in the Southeast Asia. This plant is also capable to manufacture grades which are used in the electronics industry. So Southeast Asia has slowly become a hub for electronics manufacturing, and we see exports in this area to grow in future. Apart from that, we also have approvals with some of our large tire accounts who have plants in India and also outside India. So gradually we expect that exports to those customers would also grow in the next 2 to 3 years.
All right, gentlemen, appreciate your time. Thank you for joining in and giving us more insights as to how the business is shaping up.